Julian, what do you think of the new emerging U.S.-China trade financial virus headlines?
Well, it's obviously a challenge for markets. And if you think about it, given what's happened to the economy and given our expectation, and I think the market's realizing expectation that the reopening is going to be slower than perhaps first thought, the V-shaped recovery, I think, is not on anyone's minds anymore, that it's logical with an election coming up on November 3rd that you're going to have to focus people on the relationship with China. But it just really shows you that you're going to have to walk. And you see it this morning, essentially, that the more aggressive headlines came out about an hour ago or so, and the market started to roll. You're going to have to balance between what the effect of them is on the market and what the effect is on the psychology of the American people. It's a difficult situation.
Totally. And for us here as well, too. It's like when there's nothing material happening, but it does weigh on sentiment, it's hard to digest it. So how does that play into any kind of valuation when you have this bizarre overhang that no one knows how to price, and then you literally cannot price companies' cash flows because they don't even know what they're going to be able to sell and when?
No, you can't. From our perspective, what's been really important in thinking about why we are where we are is that, off the bottom, you got this incredible stimulus from the Fed and the federal government. And what it did was unlock the ability of the capital markets to refinance corporate America. And so what's important now is looking at sort of the companies that are haves and have-nots, not necessarily in terms of their business at the moment, but in terms of their liquidity position. Okay, so the most important idea here is over the last couple of months, there are a lot of companies have refinanced such that there's no issue into sort of the second half of 2021, which if we don't get recovery, which we don't think is going to be the case, then you'd get solvency issues somewhere. But the financing is very, very important.
Yes, very important. And there's been a lot of talk of how the equity market is not reflecting the underlying economic fundamentals. Yet this week, as we saw sort of what's truly continuing to outperform, like tech, the large cap leaders leading in the way where small caps continue to get taken out, it feels like maybe we are positioning for a long, sluggish growth slog. What do you think?
Well, there is an element to that, but actually, over the last couple of days, we think there's a subtle change going on in the markets. I think that Chairman Powell's talk a couple of days ago and his insistence that there won't be negative interest rates on his watch, something we heartily endorse. If you saw yesterday in the markets, turn the tide in terms of financials. And what we found is over the long stretch of time is that not only when you make the transition from bear market to new bull market, do the stocks and sectors that were lagging on the way down start to lead, but in general, if financials are going to outperform, and one day does not a trend make, but if they're going to outperform, that generally comes with a better market backdrop.